If you're self-employed, freelance, or run a side hustle, the IRS expects you to pay your taxes 4 times a year, not just in April. Skip it, and you get hit with a penalty on top of the tax you already owe. The good news, it's simpler than it sounds. Here's exactly who has to pay, how much to set aside, and how to stay protected from the underpayment penalty. Let's break it down. First, the why. The U.S. tax system is pay-as-you-go. A regular employee pays all year automatically because their employer withholds tax from every paycheck. But when you're self-employed, nobody withholds anything. So the IRS asks you to do it yourself in 4 installments throughout the year. That's all quarterly taxes really are. So who actually has to pay? The simple rule: if you expect to owe at least $1,000 in tax for the year after any withholding, you're supposed to make quarterly payments. That sweeps in most freelancers, gig drivers, contractors, and even people with big investment or side income that isn't withheld. And it's not only freelancers and gig workers. You can owe estimated taxes on any sizable income that wasn't taxed up front: investment gains, dividends, interest, crypto profits, rental income, or even a big retirement withdrawal. If you sold stock or property for a profit this year, that's the classic surprise that catches people off guard. And the IRS spells this out. This is the real Form 1040 ES, estimated tax for individuals. Right here, the section who must make estimated tax payments lays out that $1,000 rule. This is the form that comes with the worksheet and the payment vouchers for each quarter. Now the question everyone asks: how much should I set aside? Here's the simple, safe answer. For most self-employed people, set aside 25 to 30% of your net profit. That's your income after business expenses. That percentage covers both your income tax and your 15.3% self-employment tax. Why that range and not less? Because self-employment tax alone is over 15% before you add a dime of income tax. Stack federal income tax on top, and 25 to 30% is the sweet spot for most people. Higher earners or those in high-tax states should lean toward the top of that range, or even a bit above. Let's make it concrete. Say your side business nets $30,000 of profit this year. 25% is $7,500. 30% is $9,000. Split across 4 quarters, that's roughly $2,000 to $2,300 per payment. Move that money the moment you get paid, and the quarterly bill is already sitting there waiting. But here's the smartest move in the whole system: the safe harbor. You don't have to predict this year's tax perfectly. If you simply pay in 100% of what your total tax was last year, or 110% if you're a higher earner, you're generally protected from the underpayment penalty, even if you earn far more this year. One condition matters: the payments have to be made on time, across your 4 installments. That safe harbor is the move most pros use. Take last year's total tax, divide by 4, and pay that each quarter. Even in a breakout year, you're generally protected from the underpayment penalty. You'll just settle the rest in April. It turns a guessing game into simple math. Now the deadlines, and they're not evenly spaced, which trips people up. For your 2026 income, the first payment is due April 15th, the second June 15th, the third September 15th, and the 4th January 15th of the following year. Put all 4 in your calendar right now. How do you actually pay? The easiest way is online and free. IRS Direct Pay from your bank account, or the IRS online account. There's also the EFTPS system, where you can mail a paper voucher from Form 1040 ES. Online takes about 2 minutes and gives you instant confirmation. Use that. And don't forget your state. Most states with an income tax want estimated payments too, on their own forms and their own schedule, though the deadlines usually mirror the federal ones. So when you set money aside, build in your state's rate on top of federal. Check your state's rules so a state penalty doesn't sneak up on you. Now, what happens if you skip them? The IRS charges an underpayment penalty, and it works like interest on the tax you should have paid along the way. The rate has been around 8% recently, charged for every part of the year you were short. It's very avoidable, but it adds up fast if you ignore it. Here's a key nuance that helps a lot of people. The penalty is based on whether you paid enough total, not whether each payment was perfect. And withholding counts as paid evenly across the year. So if you also have a W-2 job, you can bump up that withholding to cover your side hustle tax and skip writing quarterly checks entirely. What if you've already missed a quarter? Don't panic, and don't wait until April. Pay as soon as you possibly can. Because the penalty is calculated for each period you were short, paying now stops the clock and limits the damage. Catching up late is always better than not catching up at all. Let's talk about the mistake that quietly causes all the pain: spending the tax money. When a payout hits, it all feels like yours. It isn't. A chunk belongs to the IRS. The fix is one habit. The day you get paid, move 25 to 30% into a separate account you don't touch. The quarterly payment is then effortless. One more tip for your first year. If you're brand new to self-employment and have no prior year tax to base the safe harbor on, just use the 25 to 30% rule on your actual profit each quarter. And if your income is lumpy, big some months, slow others, you can pay based on what you actually earned that period. And one last pro move: when in doubt, round up. Overpaying a little just comes back to you as a refund, but underpaying triggers a penalty. So if your income is climbing or unpredictable, pad your payments slightly. Think of it as an interest-free insurance policy against a nasty April surprise. Quick recap. If you owe $1,000 or more, pay quarterly. Set aside 25 to 30% of your profit. Use the safe harbor, last year's tax divided by 4, paid on time, to generally avoid the underpayment penalty. Pay online by the 4 deadlines. And move the tax money out of reach the moment you're paid. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so every figure here is checked against the IRS sources. Always educational, never advice for your specific situation. Bottom line, quarterly taxes feel scary, but they're really just one habit. Set the money aside as you earn it, and pay 4 times a year. Use the safe harbor, pay on schedule, and you'll generally avoid the underpayment penalty. You'll still settle any balance in April. Do this, and April becomes a non-event instead of a crisis. This is general education, not tax advice, so check with a pro about your situation. Subscribe to the Tax Breakdown for simple tax-saving tips before you file.